Just to get some more detail, Jim, on these programs. The Fed is working hard on this Main Street lending program. They do not have a lot of details. What's clear is that to get this Main Street lending program going, Jim, the Fed's going to need this stimulus bill. I'm assuming there's an allocation in the stimulus bill. That stimulus bill will go to that money will go to Treasury. Treasury can use that as the backstop for the Federal Reserve to go out there and lend to small and medium-sized businesses. We don't know more about it. The Fed's saying it's going to announce it soon. A little more detail on the corporate bond program. If a company decides to defer interest and principal after 6 months, they cannot pay dividends or conduct share buybacks. So there's that restriction, but no particular restriction, Jim, that I can see on whether or not they can fire employees. The Fed not saying that is not in there. Finally, as you know, they have now said they will do as much as needed, which means they're just going to keep buying treasuries, buying mortgage-backed securities, and now commercial mortgages until this thing is fixed, but no real sort of limitation right now or indication of when they'll stop. Just they're going to keep going as much as needed. Jim?
I just keep hearing from people in these markets that they're frozen, they're frozen, they're frozen. I just think that can't be true. I mean, maybe that's just people want a better price. After what you just said, the idea that it's frozen seems chimerical.
So, Jim, I think what's going to happen is this. The Fed has rolled these programs out step by step. It's not a silver bullet situation, is my understanding, the way guys are talking to me in the markets. They need to be in place. For example, today, the critical money market lending facility is going to launch. That should help markets trade. It should provide critical liquidity. But as we found in every single, very much like the crisis, it's like whack-a-mole. Fed does this here, you have a problem over there. Does it here, have a problem over there. So now it's getting to a place where it's going to provide liquidity and backstops for almost the entire credit market that's out there. Piece by piece, these programs are going into place. And we have only the slightest information or the slightest inkling yet that things have gotten any better. We'll see after today, Jim. I expect that maybe some of these markets will perform better.
David?
Yeah, Steve, real quickly, you mentioned the crisis, of course, because that's what we always go back to. But we've never seen the Fed do anything quite like this.
No, that's absolutely right, David. You were there step by step when the Fed rolled out these programs. And what happens now is the Fed's going further down the risk spectrum, taking risks it hasn't taken, backed up by the Treasury in a bigger way than it ever has been before.